Well, welcome to this very special show. This is the Budget Hotline on ET Now. Thank you for joining us over the next half an hour. And for the rest of the week at exactly this time, we're taking live questions. We're going to answer your questions on personal finance, on tax and on real estate in the run-up to the big budget announcement on the 1st of February. Now, our phone number is at the bottom of your screen. So if you have any questions about how the budget's going to impact your money, what your reaction should be as an investor, and specifically to do with tax, feel free to get in touch with us. In fact, joining me today is Pankaj Ghadiali, who's been helping us with our taxes for a while. Mr. Ghadiali, thank you so much for joining us. I'm going to obviously start off by asking you, what is your expectation from the budget this year? What do you think will be the big changes? Because a lot of investors are very optimistic.
Well, I think as far as the expectation is, one can expect for the sky. But what really the finance minister can give, according to me, is a little moderation in the tax slabs, which I'm quite certain that will happen. Perhaps he may not increase the threshold limit, but keeping the threshold limit at the same, because he doesn't want people to go away from the tax net. Keeping the limit as the same, there are 2 or 3 ways where he can do. The basic slab, which is at 10% from 2,50,000 to 5 lakhs, can be increased all the way up to 10 lakhs of rupees.
Yes.
The next slab will be from say 10 lakhs and 1 to 20 lakhs, could be at 20%, and then the remaining at 30%.
But there was that, and I have to ask you about this, that the Prime Minister in his 31st December address made a comment that only, he said the number of people who declared their income to be 10 lakhs and above are a very negligibly small number.
That's right.
So it does set a tone that maybe this government wants to make more people accountable. How are they planning on doing that? What's your guess?
So therefore, if they reduce the rate, then they'll see probably a better compliance. And there is another section 87A where there is a marginal relief. So today, you get a relief up to 5,000 rupees in taxation. So if your total tax is not exceeding 5,000 rupees, so that means that if your income is between 2,50,000 to 3 lakhs, then at 10% your tax does not increase more than 5,000.
Yes.
In such case, under 87A, you get a relief and you don't have to pay any tax. Of course, if you exceed 3 lakhs of rupees, or if the tax payable increases more than 5,000, then you don't get that relief. So similarly here, they can increase this relief to maybe about 15 or 20,000 rupees, in which case again keeping the threshold as the same, a person will not be paying any tax up to 4 or 5 lakhs of rupees.
All right, let's answer one question. Abdul Rahim has written in from Dubai. He tells us he's an NRI, currently investing 1,000 rupees in mutual funds every month and getting a rental income of 26,000 rupees every month in Chennai, which goes into his NRO account. He says he gives his 10,000 rupees to his parents and the remaining goes into mutual funds every month. He wants to know, does he have to pay taxes on this income? Now, out of the 26,000 rupees he's making every month, 10,000 go to his parents and the rest go into a mutual fund. But obviously, it doesn't matter where you put that money. You have to pay tax on an income, right? Yeah.
So even at 26,000 multiplied by 12, he will be crossing the basic threshold. So he will be liable to pay tax, although the amount of tax might be very less. And as I said, that he will be entitled to the marginal relief under 87A. Yes. In which case he will go out of he may not have to pay tax, but still file his returns.
So you still file those returns. In fact, Pankaj, I must ask you this. I'm personally hoping that the 2 lakh rupee deduction on interest paid on home loans will actually go up to 3 lakhs and ambitiously to 5 lakh rupees. Do you actually see that as a possibility?
I think that should be. And I have another point to make on that
Please,
note.
Go ahead.
See, today there are 2 kinds of situations. If you have a house, or if you buy a house, you take a home loan and you are paying interest, you are allowed a deduction up to 2 lakhs of rupees, provided you are yourself occupying the house.
Yes.
The second situation is where the same house, the same loan, same everything, but you are not staying in the house. Let's say you have already another house, or you are living in your parents' house and you let out this house, and you are earning rental income. Then the entire interest is deductible.
Yes.
This is, I think, a disparity which should be done away with. In fact, I don't see any reason why a person who is letting out the house should be given a preference as compared to the person who is buying a house for his own occupation.
Yes.
So I think not only the limit should be increased, but this distinction should be let out.
In fact, if the government's mood is anything to gauge that the government wants all Indians to own a home, which means you want first-time home buyers, you want to encourage first-time home buyers, then they should, would you say the preference should be given instead to someone who is buying a house for the first time, whether that's an individual or a couple?
Yes, and that could be by way of benefit on account of interest. Because even today you buy a one bedroom house in a metro, it's going to cost you almost 1 crore of rupees.
Yes.
So, even if 25% is your margin money and 75% is borrowed, your interest cost will not be less than 6 to 7 lakhs of rupees. So, that is the amount of interest that you are going to pay annually, and that should be allowed as a deduction.
Yes, that should be allowed as a deduction. In fact, Kuldip Kumar, who is the partner tax regulatory services at PwC, joins us from Delhi right now. Kuldip, thank you for joining us. Welcome to the show. We were just talking, before we take questions, we were just talking about expectations from the budget. And Pankaj Ghadiali had an excellent point to make. He said encouragement for homes and for home buying should be given to people who are buying for the first time or who are self-occupying those homes. Now, is that something you second, Kuldip, that, right now the advantage to homes that are rented out? All right, we don't have Kuldip right now. We'll try and get him back. Let's take a question. Pramod Singh has sent us an email from Kanpur. He says, I'm a salaried person who owns a 2-bedroom flat in Kanpur. My family is grown. I need more space. My adjacent flat is likely to be sold, so I can install a door if I purchase that flat. Since I currently own the flat and there's no outstanding this thing, can I avail of the income tax benefit if I buy the flat next to him? So considering that there are 2 separate units in the building plans, it qualifies as buying a separate house, doesn't it, Pankaj?
Yeah, it is a separate house. I mean, what benefit is he talking about? I didn't follow.
No, so his question is, he owns one house, there's
Yes.
no home loan on it. He's going to take a home loan and buy the house that's adjacent.
That's right.
Knock down the wall and make it one large home.
Okay.
So technically, even though he is treating it as one home,
Yeah.
he wants to know, will he get tax benefits on the new house that he's buying?
Yes, he will get tax benefit. In fact, as I said, he will get a larger tax benefit than a self-occupied property, because the second home, as far as the income tax is concerned, would be considered as a separate house, which would be deemed to be let out. Even if you are using it for your own self, the income tax department will consider as if you have let it out, and you have to assume a rent. So let's say, supposing the rent is you take 20,000 rupees a month. So 2,40,000 rupees you take as if you have earned that rent. Out of that, you deduct the property taxes, you deduct your 30% standard deduction on that, and you deduct the entire interest that you are paying on the loan.
Yes, and what
So
about
it's
more
more
other
beneficial
expenses?
than your first house.
What about other expenses like maintenance and things?
No,
that
maintenance
you
is
can't
never
deduct?
deductible.
You can't deduct. All
No.
right. So basically, for anybody who's renting out a home, what you can do, what Pankaj is saying, is that even if you're not actually renting it out, you consider a rent, and there is a calculation that your tax advisor will give you on how you can fix that rental value. So you say that, okay, this is how much rent I'm getting, so on that you have to pay tax, but there are lots of things you can deduct from that, from that rent as well. So that's something you can do. So the second home will be considered rented out, and you can save a lot of tax on that. Even if you've knocked down the wall and treated it as one home, as far as the income tax department is concerned, they're 2 separate homes. Hira Lal is on the phone line from Jaipur. He's just called us. Mr. Hira Lal, good evening. How can we help you? What's your question?
Good evening, Ms. Faye. I am a senior citizen,
Yes.
and I am what I am looking for, that I am running my house and only from interest. So interest that I get from my bank deposits.
Yes.
So what I'm looking forward, if that interest could be completely tax free for the senior citizens. With I have no other business at all. So what I have is just my savings that I'm getting from interest, and if they are also taxed, then I'm eating my money.
Mr. Hiralal, how much is your income right now on your fixed deposits? What tax bracket do you fall in?
Excuse me?
What tax bracket are you in? Do you pay 10, 20, 30% tax on your deposit interest?
Around 7-8.
Okay, around 7-8. I'm assuming
Yeah.
lakh rupees that you get, but this is a very fair question, and I'm going to bring in our other guest right now. Kuldip Kumar joins us. Kuldip, for all the senior citizens who derive their entire income from fixed deposits, are looking at a lowering interest rate regime where someone who's making 9 or 8% is going to be making 7 or 6 or even lower than that perhaps, plus all of that money gets taxed. Can we possibly look at is there a possibility in this budget that the finance minister will be kind to our senior citizens and maybe reduce their tax burden? Kuldip, can you hear me? I don't think Kuldip can hear us right now. Pankaj, do you want to take that question, please?
Yeah, see, basically for senior citizens, there is a additional relief. So up to 3 lakhs of rupees, there is no tax. If you are a very senior citizen, that is, of the age of 80 years plus, then there is a further relief. But barring that, I mean, there is no relief. Unfortunately, you have to pay tax. Death and taxes are two inevitable things, and that's where we are right now.
That's very grim news. But there is if he's in the lowest tax bracket, he could possibly write a letter to the bank saying don't do the TDS, right? That's a possibility. Pankaj?
No, but that TDS is, TDS is, you are
Eventually
going to get a credit of that in the taxes payable. So in fact, TDS is good. So at least at the end of the year, you are not shocked with a big amount of tax payable. So, and the amount of TDS, let's assume that even if he is getting say 7 lakhs of rupees as interest, so your TDS would be about 70,000 rupees.
Right.
And if you go to see, your total tax on that would be little less than that. So you could tell the bank to give you a lower deduction rate, but there are a lot of hassles for that. It's not as easy. And filing of the form for saying that you're not taxable is not correct, because you would be filing a wrong declaration in that case. So the only option is that you will have to go and seek refund.
But is that a good request to make of the finance minister this year to actually maybe show some mercy on our senior citizens and give them a slightly better tax scenario to work with?
Yes, you can. I mean, the law can be framed in such a manner, but then there are as many exceptions and rules you go on making, it becomes more and more complex.
It becomes more.
So in the view of keeping it simple, we are driven by the same stick.
Right, in the view of keeping it simple, unfortunately, this is where we are. Senior citizens do have to pay tax on the interest that they generate from their fixed deposits. One word of advice is to consider at least a small portion of equity mutual funds in your portfolio. We're going to talk about the taxation of equity mutual funds on the other side. We'll take a quick break. In the meantime, our phone lines remain open. Get in touch with us. Stay with us. Watching Budget Hotline here on ET Now. I'm Faye D'Souza. Thank you for staying with us. We're answering all of your questions live on the show, which we're going to do right up till Budget Day, which is the 1st of February. Every day at 6:30, we'll answer questions on personal finance, on tax, and on real estate. So if you have anything to ask us, pick up the phone and call us. Our phone number is at the bottom of your screen. Kuldip also joins us. Kuldip heads the tax function at PwC. We're very glad to have him on the show. Kuldip, before I take the question, and I understand Mr. Singh is on the phone line from Nagpur, I want to very quickly understand from you, do you also foresee some sort of goodies from a personal taxation point of view in this budget?
I don't know what exactly goodies people will get, but of course the expectation is very, very high. Although the expectation is that the basic exemption limit may double up, even the slab rate may come down. But the fact is that post demonetization, there is huge expectation. But keeping in view that government needs money to spend for its social agenda and as well as for the various developmental activities. So I don't think that there would be a very big kind of a tax relief. But of course, basic exemption limit, for example, say going from 2,50,000 to 3 lakh, and for senior citizens going from 3 lakh to 3,50,000, and some tinkering with the 80C limit is definitely on cards.
Right, so this is what we're hoping for, really. We're hoping for benefits for senior citizens, benefits for first-time home buyers, not specifically based on ticket size, but based on the fact that you're buying a home for the first time. That will really also kickstart our real estate sector. Mr. Singh is on the phone line from Nagpur with a question for us. Mr. Singh, good evening. Thank you for calling. What's your question?
Good evening, Faye. Actually, my query is that my son, after 2 years of service, has joined MS program in the US. And while in service, he has invested in the stock market.
Okay.
And this year, actually, he is getting around 2.5 to 3 lakhs rupees short-term capital gain, though he is studying in the US.
Okay.
So what is his tax implications?
Okay, first of all, I want to congratulate you on your son's success. I'm sure you're very proud of him. I'm going to take this question to Kuldip. Kuldip, whether you're an Indian resident or not, based on your taxation and based on your number of days you spend overseas, you still have to pay short-term capital gains tax, don't you?
No, absolutely. Now, since his son has moved to the US, and of course, at present his residential state to need to be determined based on number of days he is spending. But irrespective whether he is a resident or non-resident of India, and if there are a gain on the sale of the shares, and that would be subject to tax in India in accordance with the Indian taxation rules. So, in other words, if these are the listed securities and which are long term, I mean, the shares are held for more than 1 year, there would be no capital gain, those would be exempt. But if it is a short term capital gain, that would be subject to tax in India.
All right, and Mr. Singh, I want to ask you this: if there's no reason for your son to be exiting his stock holdings at this point, it might make sense for him to hold it until the holding is about a year old. That way, he can avoid paying this tax altogether, which would ideally be the best way. But Pankaj, just to clear things up, he's still going to have to file his taxes at this point, yeah?
Yeah, he will have to file his tax return. If it is taxable, yes. If he has any taxable income, then he has to file the tax return. There is no choice.
There is no choice. So your taxable income and the reason to file your tax returns are not affected by whether or not you live in India or not. If you're making an income in India, you're going to have to file your tax returns. But we're here to help. Saurabh Mishra is on the phone, sent us an email from Delhi. He's 30 years old. He says he took a joint home loan of 30 lakh rupees with his wife. That's an excellent decision because it doubles your tax savings as a unit. He says we're both working and we want to avail of the tax rebate from the home loan. How do we show that both of us are paying the EMIs, or is one person paying the EMI enough? I think this is an excellent question. I'll take the question first to Pankaj. Pankaj, also there are a lot of banks who I believe in a path-breaking social, decision said that a woman as a co-signee on a bank loan will get a lower interest rate, and a lot of Indian women are now co-signees on their bank loans, and as a result, co-owners to the homes that they live in. But how do you show that the EMI is being paid by both? Is it important to show that the EMI is being paid by both?
The EMI is one thing. The interest, what benefit he wants to take is of the interest. And in order to take the benefit of interest, both of them are not going to get the deduction. In other words, you're not going to get double the deduction.
Yes.
The total deduction will remain the same. It will be divided between the two in the ratio of their repayments.
True. No, but what I meant by double the deduction is just let's assume that the total interest being paid on the home loan is 6 lakh rupees for the year, which is quite high. One of them can claim 2 lakh rupees and the other one can claim the other 2 lakh rupees.
Unfortunately, no.
No?
No. Total deduction will be restricted to 2 lakhs and that 2 lakhs will be spread between the two depending upon in the ratio in which they have repaid.
What about the 1.5 lakh rupees available on principal repayment under Section 80C?
That you can claim. That both can claim.
That they both can both. So that becomes, it goes up to a total claim of 5 lakh rupees then.
Yes.
1.5 and 2 lakh rupees. Kuldip, I want to ask you this. How do they show on paper how the split of the EMI is? Let's assume one of them is actually making the payments, which is how it works. How do you show that you're splitting it 50-50 between the two of you?
First of all, my understanding is that if the house is in the name of both this husband and wife, and they both have funded the house, in that case, both would be eligible for the deduction, and that is both for 80C as well as for the housing interest deduction up to 2 lakh rupees. Now, second is that if one person is repaying the EMI and the other person is not making any payment, then the second person will not get the deduction. So how you need to do is that if the house in the both name, and even if it is a joint account and joint account is funded by both husband and wife, then both can claim the deduction, but they will need to support or justify that the payment actually has been made by both of them separately from their own earnings.
All right, it has to be. So for example, if there is money going out of the wife's account, if the EMI is getting deducted from the wife's account, then the husband needs to transfer half that money into his wife's account every month. And when you show that bank statement, you'll be able to prove that you have split the EMI evenly. It has to show that it's coming out of your respective accounts. Pradeep is on the phone line from Mumbai. Pradeep, go ahead. What's your question?
Yeah, thanks. This is in regard with listed NCDs, investments in listed NCDs. And the question is pertaining to, let's say, if the time horizon is over a year, and these are all listed securities. So whether I do get, whether it comes into the ambit of capital gains or it falls into the interest income and thus attracting the slabs that are relevant.
Kuldip, NCDs are held for 1 year. Is that capital gains or is that interest income?
If these are the NCD, these would definitely be subject to the capital gain because the NCD is a capital asset, and those would be subject to tax depending on the holding period. And if these NCD are listed, then the 1 year holding period may apply. But if they are not listed, then the 3 years holding period will apply.
All right. Pankaj, we were just talking about capital gains tax. The good thing about capital gains tax is that there's indexation available, right? You can bring down the amount of tax that you would most likely pay, as opposed to interest income, which is just taxed at the slab.
Yeah. So that's known as the cost inflation index, which is declared by the government every year, and you can multiply it by the index of the year of sale and divide it by the index of the year of purchase. And the resultant figure would be your cost or the inflated cost. That is to be deducted as the basic cost from the sale proceeds.
All right. So the important thing to remember is that when you're claiming capital gains tax, you have to get a tax consultant to look at your specific case. Each specific case is different. So while you can take this advice as guidelines, you have to have someone specifically looking at your papers and helping you with your tax filing. But we're going to be here till the end of next week. So if you have any questions, our phone lines will remain open. I want to thank both Kuldip and Pankaj for spending time with us, taking time out of their days to answer our question. And if you have any questions at home, get in touch. Thanks for watching.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.